Y'all ready for this? Let's go.
Welcome back to the Ben James Smith podcast. Over the past series of episodes, we've explored a number of themes: how capital thinks, why governance matters, what drives property markets, why structure determines outcomes. And throughout those conversations, there's been a consistent idea that the most durable investment fund platforms are not built around individual opportunities. They are built around systems for deploying capital consistently over time. Today, I want to take that one step further, from philosophy to implementation. Part 1, why this matters now. We're currently in a very specific part of the market cycle. Interest rates have stabilised. Inflation is easing, but not fully resolved. Development activity has slowed. Supply constraints remain. And at the same time, institutional capital is increasing its focus on residential property. So we have an interesting environment. Uncertainty has reduced, but confidence has not fully returned. And historically, those are the periods where disciplined capital begins to position itself, not reactively, but structurally. Part 2, from ideas to structure. Everything we've discussed in this series, governance, alignment, capital control, scalability, is not theoretical. These are the principles that underpin how serious investment fund platforms are designed. Because at scale, investing is not about finding the next deal. It's about building an environment where good decisions are made repeatedly, where capital is protected before it is grown, and where outcomes are driven by structure, not circumstance. Part 3, the natural next step. At some point, every investment philosophy reaches a point where it moves from discussion to execution, not because the thinking changes, but because the structure is ready. And that's really what today represents: a transition from explaining how capital should be managed to operating within that framework. Part 4, opening access. Over the next period, we will be opening access to a structure designed around the principles we've discussed throughout this series. A structure focused on disciplined capital deployment, controlled risk, repeatable processes, long-term alignment. This is not about chasing opportunity, it's about building consistency. And importantly, it's designed to operate independently of individual projects, because projects are outputs. Structure is the foundation. Part 5, who this is relevant for. This next phase won't be relevant for everyone, and it's not intended to be. It's for those who think about capital in a particular way. Those who prioritize structure over speed, alignment over short-term gain, consistency over volatility. People who understand that long-term outcomes are not driven by isolated decisions, but by the systems behind them. Part 6, what happens next. Over the coming weeks, we'll begin sharing more detail around how this structure operates in practice. Not just what it does, but how it behaves, because behavior is what ultimately matters. And if you've followed this series, you'll already understand why. So rather than seeing this as an announcement, it's better understood as a continuation. The ideas we've discussed are now being applied, the framework is now active, and for those who think in this way, the next step becomes clear naturally. Thanks for listening, and remember, the best investment opportunities don't need to be explained, they need to be understood. I'll see you in the next episode.